Good day. Welcome to another section of AE accounting tutorials. We are continuing our series on accounting for leases, that is under IFRS 16 leases. This time we are going to take a question on how lease payments are made in advance by the lessee. Okay, but before we take the question, I will encourage you to subscribe to this channel, turn on the notification bell so that anytime I upload any new video, you'll get notified. Thank you. So let's go through the question together and see how we will make an accounting arrangement by the lessee. That is when lease payments are made in advance. Big Brothers Band leased a set of musical instruments from Young Stars Equipment Limited on 1st January 2018. The cash price of the instrument was 10,000 Ghana cedis and the annual rental payment is 3,000 Ghana cedis payable in advance. The initial period of the lease is 4 years and the implicit interest rate in the lease is 13.7%. The set of instruments are expected to have an economic useful life of 4 years and depreciation is to be charged on the basis on cost with now residual value. Big Brothers Brand's accounting period ends on 31st December and finance charge is accrued at 31st December. Required. Show the allocation of finance charge using straight line method, actuarial method, and sum of years digits method. II. Show obligation under right of use asset account, applying the actuarial method for the finance charge allocation. III. Show the extract of the statement of profit or loss and statement of financial position in respect of the lease over all relevant years. Alright. The key things you have to take note from this question is that the lease term begins on 1st January 2018. Okay. And then the cash price of the instrument is 10,000 Ghana cedis. And the rental payment is 3,000 Ghana cedis payable in advance. That is, the lease is being payable in advance. Payments are made in advance. And the implicit interest rate in the lease is 13.7. Okay. So before we begin with the first requirement, that is to determine the finance charge with the three methods, that is the straight line method, actuarial method, and the sum of years digit method. The standard says that at the initial recognition or at the commencement date, the lessee shall recognize the lease liability and the right of use assets by the IFRS 16 criteria. That is what the standard says. Okay, so the lessee has to recognize the lease liability and the right of use assets. So let's try to recognize the lease liability. From this question, there are no many components to calculate our lease liability. The lease liability has been given to us straightforward in the question. Okay, that is the cash price of the instrument. Okay, so we can say that the lease liability is the cash price of the instrument and the amount is 10,000 Ghana cedis. Is that clear? So we are done with the lease liability. So with the right of use asset, lease liability is one of the components of right of use assets. So we have the lease liability. That is 10,000 Ghana cedis. Good. After that, then we consider any payment made at or before the commencement date. Okay. So any payment made at or before the commencement date. Okay, and that is the rental payment. Okay, that is 3,000 Ghana cedis and the amount is 13,000 Ghana cedis. So at initial recognition, the right of use asset is 13 Ghana cedis and the lease liability is 10,000 Ghana cedis. After the initial recognition, then the next thing we need to do is subsequent measurement. Okay, so that is the requirement I. That is where we are going to determine the finance charge by using the straight line method, actuarial method, and sum of years digit method. So let's begin with the straight line method. Is that clear? So we are beginning with the straight line method. Okay. So the period is, the lease term is for 4 years. Is that okay? And the lease term starts with 1st January 2018. So we have 2018, 2019, 2020, and 2021. Is that clear? 4 good years as the lease term. Okay. Now, because we are using the straight line method, we are going to spread the finance cost on a straight line basis. Okay, now we want to determine the finance charge. Before we do that, we need to find the total finance charge before we can spread it on a straight line basis. So we have total finance charge. Okay, the total finance charge, the formula is total rental payment minus the cash cost price. Okay, good. So the total rental payment, to determine the total rental payment, that is the annual rental payment multiplied by the lease term. Okay, so the annual rental payment is 3,000 Ghana cedis multiplied by the lease term, which is 4 years, minus the cash price of 10,000 Ghana cedis. So that is 12,000 Ghana cedis minus 10,000 Ghana cedis. Okay, so the total finance charge is 2,000 Ghana cedis. Okay, that is the total finance charge for the lease term. Okay, now we are going to determine the annual finance charge, but remember that payments are made in advance. Okay, if payments are made in advance, it means that payments are made at the beginning of the financial year. So for the first year, payment has been made. So it means that it remains with 3 different years for the payment to be made. So we are going to spread the finance charge for the remaining 3 years. Okay, so hence finance charge, that is yearly. Okay, for the 3 good years, it is going to give us the total finance charge, that is 2,000 Ghana cedis. We divide it by the remaining 3 years. Okay, so that is going to give us 666 cedis 67 pesos. Okay, 666.67 Ghana cedis as the annual finance charge for the 3 period. Is that clear? Now we are able to determine the yearly finance charge for the remaining 3 years. Is that okay? So now let's consider the schedule for lease payment and finance charge under the straight line method. Okay, so because payments are made in advance, we begin with the liability at start of the period. Then we take our rental payments, okay, from the liability at the period. Okay, when we take the rental payment, the balance will be liability during the period. Okay, then we consider the finance charge, then we add the finance charge to the liability during the period to ascertain the liability at the end of the period. Okay, so that is what we are going to do. So at the initial recognition, you can remember that the lease liability is 10,000 Ghana cedis at the initial recognition, and the rental payment for each year is 3,000 Ghana cedis. So we take the rental payment from the liability at start. Okay, that is going to give us 7,000 Ghana cedis. But remember that the finance charge, the annual finance charge for the remaining 3 years is 666.67 Ghana cedis. So we can round it off and give 667 for the first year. Is that okay? So determine the liability at the close. We are going to add the liability during the period to that of the finance charge. That is going to give us 7,667 Ghana cedis. Okay. when we move to subsequent year, that is 2019, the liability at the close of 2018 becomes the opening liability for 2019. Okay, so the opening liability becomes 7,667 Ghana cedis. Is that okay? Then we consider the rental payment again. Okay, so we take the rental payment from the initial liability. That is going to give us an amount of 4,667 Ghana cedis. Okay, then we consider the finance charge. We've determined it already. Okay, so the finance charge is 667 Ghana cedis. So we add it to the liability during the period. That is going to give us 5,334 Ghana cedis. Okay, remember that the liability at the close of 2019 becomes the opening liability for 2020. So that is 5,334. Okay, consider the rental payment as 3,000 Ghana cedis. So that is when we take the rental payment from the opening liability, we are going to get 2,334 Ghana cedis. Okay, but remember that the annual or the total finance charge is 2,000 Ghana cedis. It's 2,000 Ghana cedis. Is that clear? It's 2,000 Ghana cedis. It means that when we add the 3 finance charge, it's supposed to give us 2,000 Ghana cedis. Is that clear? All right. So we had 667. So left with 666 Ghana cedis. So the 3 will give us an amount of 2,000 Ghana cedis as the total finance charge. I've rounded this balance. So when we add this to this, we are going to get an amount of 3,000 Ghana cedis. Is that clear? Remember that the closing liability for 2020 becomes the opening liability for 2021. Okay, and the rental payment still remain 3,000. When we subtract this from this, we have no liability during the period, no finance charge, no liability at the close of the period. Okay, so this is how we prepare the schedule for payment and finance charge under the straight line method. Okay, here the finance charge is spread on a straight line basis, okay, for the whole or for the years. Okay, so basically that is what we do under straight line method. We are still on the requirement I. Okay, but this time we are going to use the actuarial method to determine the schedule of lease payment and finance charge. Okay, remember that the year still remains 2018, 2019, 2020 and 2021. Okay, so the initial lease liability is 10,000 Ghana cedis as usual. Okay, then the rental payment is 3,000. So we are going to subtract it from the initial lease liability. Okay, that is 7,000 Ghana cedis. But for actuarial method, we consider the interest rate implicit in the lease. Okay, so the interest rate implicit in the lease is 13.7% from the question. So at any point in time, we are going to apply the interest rate implicit in the lease on the outstanding liability. Okay, at any point in time, we apply the interest rate implicit in the lease, that is 13.7% on the outstanding liability, that is a liability during the period. Okay, so when we apply 13% on this, it is going to give us an amount of 959 Ghana cedis. Okay, then we add it to the liability during the period. That is going to give us 7,959. Remember that the closing liability for 2018 becomes the opening liability for 2019. So 7,959. Okay, then we take the rental payment. Okay, and that is going to give us 4,959. Okay, then we apply the interest rate implicit in the lease on the outstanding liability, and that is going to give us 679 Ghana cedis. Okay, then we add the 2. Okay, and that is going to give us 5,638. and the closing liability for 2019 becomes the opening liability for 2020. Okay, so 5,638. Okay, then we consider the rental payment. The rental payment from the question is 3,000 Ghana cedis constant. Okay, then we are going to arrive at 2,638 Ghana cedis. Okay, then we apply the interest rate implicit in the lease on the outstanding liability. Okay, that is going to give us 361, but we need to round it off. Is that okay? So that there will be no closing liability, okay, for 2021. So that is 362. We've rounded it. It's supposed to be 361.4 when we apply this, okay, but we want to do it in a situation where the closing liability for 2020 will be the same as the rental payment. Okay, so when we add this to this, we are going to get an amount of 3,000 Ghana cedis. The closing liability for 2020 becomes the opening liability for 2021. That is the same 3,000. Okay, then the rental payment still remain the same. There is no liability during the period, no liability or no finance charge for 2021, and no liability at the end of the period. Okay, so this is how we prepare the schedule for lease payment and finance charge using the actuarial method. Okay, this is under subsequent measurements. Okay, so let's look at how we prepare this schedule using the sum of years digits method. We are still on the requirement I. Okay, by this time we are going to use the sum of years digits method to determine the schedule for lease payment and the finance charge. Okay, but before we do that, because we are using the sum of years digits method, we have to first of all determine the total finance charge. Okay, and we've already done that when we are using the straight line method, but let's take this opportunity to do it again. So the total finance charge is given as the total rental payment minus the cash price. Okay, and the total rental payment is given as the annual rental payment multiplying by the lease term. Okay, is equal minus the cash price being the initial lease liability 10,000. So we are going to get an amount of 120,000 minus 10,000 Ghana cedis. That is going to give us an amount of 2,000 Ghana cedis as the total finance charge. Now, after determining the total finance charge for the 4 years, let's now determine the yearly finance charge for the remaining 3 years, because payments are made in advance, and at the commencement date, that is 1st January 2018, payment has been made. So it left with 3 different years for payment to be made. So sum of years, okay, because we are using the sum of years digit method, we consider the sum of years. Okay, that is going to give us the first year, the second year, and the third year. Because payment has been made in advance, we consider only 3 different period payment or payment period. Is that okay? So that is going to give us 6 years. Okay, good. Now we want to allocate the finance charge for the remaining 3 years. So to do that, what we are going to do is that we consider the years, the ratios, then the finance charge allocation. Okay, so we have years, we have the ratio, then we do the calculation. Okay, then the finance charge allocation. Okay, now we are going to allocate it for the years. Okay, so we have 2018, 2019, 2020. Okay, but remember that for the sum of years digits method, the implication here is that we assume that the first year's liability will be higher than the subsequent years. Because of that, we allocate higher finance charge for the first year, followed by second, third in that order. Is that clear? So what we are going to do is that because the years are 3, 1, 2, and 3, for the first year 2018, we'll attract the highest finance charge. So that will be 3 out of 6, followed by 2 out of 6, and 1 out of 6. Is that clear? So what we are going to do is that we are going to multiply it by the total finance charge, okay, with the calculation, okay. So 3 out of 6 multiplying by the 2,000, 2 out of 6 multiplying by the 2,000, and 1 out of 6 multiplying by the 2,000. Okay, that is going to give us 1,667 and 333 Ghana cedis. Is that clear? For the first year 2018, 2019, and 2020 at the finance charge. Is that clear? So that is what we are going to use to represent the finance charge column. Okay, so let's come to the schedule. Okay, so with the schedule we have 2018, 2019, 2020, 2021. As I was saying, we already determined the finance charge for the remaining 3 years. Okay, that is for the first year it was 1,000 Ghana cedis, 666 Ghana cedis, and we have 333 Ghana cedis. Is that clear? So that is what we've calculated over here. Okay, as you can see, this is what we've already calculated. Okay, so I've just transferred it from here to the schedule. Is that clear? Good. You can remember that at initial recognition, the lease liability is 10,000 Ghana cedis. Rental payment is 3,000. Okay. Then when we do the subtraction, we are going to get 7,000 Ghana cedis. Okay. Then we add the liability during the period to the finance charge for the year. That's 2018. So that is 8,000 Ghana cedis. Okay. The closing liability for 2018 becomes the opening liability for 2019. Okay, we consider the rental payment, and we are going to get 5,000 as the liability during the period. Okay, then we add the finance charge to it. That is going to give us 5,667. This will become the opening liability for 2020. Okay, that is 5,667. We consider the rental payment. Okay, that is going to give us 2,667. Then we add this, that is the liability during the period, to the finance charge. That is going to give us 3,000 Ghana cedis. Okay, this becomes the opening liability for 2021. Okay, so we also consider the rental payment as well. That is 3,000. You can see from here that there is no liability during the period, no finance charge, and no liability at the close of the period as well. Okay, so this is how we prepare the schedule of lease payment and finance charge when we are using the sum of years digit method. The requirement II says that shows obligation and the right of use asset account applying the actuarial method for the finance charge allocation. Okay, so this means that under the obligation and the right of use asset, we are going to use the finance charge that is being calculated by using the actuarial method to determine the right of use asset. Okay, good. So this obligation and the right of use asset account, it means that we are going to determine the initial liability or the liability at each period, or that is at each year. Then we determine the finance charge at each particular year, that is at the close of each year. Then we determine how much is being paid to reduce the liability. Okay, but remember that the payment is constant, that is the rental payment is 3,000. So that is what we are going to do. We are going to present it according to the years. Okay, so you can remember that for the 1st January 2018, okay, 1st January 2018, okay, the cost of the instrument, that is the plant, okay, an amount of 10,000. Remember that the instrument is an asset, okay, and because it is an asset, we are going to debit the instrument account, that is the plant account, and credit right of use asset. Okay, and remember that there is a payment being made at the commencement date. Okay, so 1st of January 2018, there is a cash payment of 3,000. Okay, as the rental payment. When payment is being made, we credit our cash account and debit the right of use asset. Okay, remember at the close of the year, that is 2018, when we are using the actuarial method, there was a finance charge for the year. Okay, so that is 31st December 2018. Okay, we have a finance charge. Okay, so as you can see from here, with the finance charge, you can see that there is 959 for 2018. Okay, so that is what we are going to use. Is that clear? Okay, so 959. Okay, so the total is going to give us an amount of 10,959. Okay, 959 as the total. Okay, we have 10,959. It means that there is a carrying amount at the close of the period. So that is 31st of December 2018. There was a balance carried down, okay, of an amount of 7,959. Okay, so it means that in the subsequent year, that is 2019, that is 1st January 2019, there is a balance brought down. Okay, that is from this carrying amount. Okay, 7,959. Okay, and there was a finance charge for 2019 as well, as you can see from here. Okay, as you can see from here, it is 679. Okay, then we bring the 679 as the finance charge at the close of the period, 31st December 2019 finance charge. Okay, all right. And there was also a rental payment at the beginning of 2019 because payments are made in advance. Okay, so 1st January 2019, there was a cash payment, okay, of 3,000 Ghana cedis. Okay, so we are going to close this account, and this is going to give us an amount of 8,638. So 8,638. Is that clear? So the carrying amount as at 31st December 2019, the balance carried down, okay, that is going to give us 5,638. Is that clear? Then this carrying amount will become the balance brought down for 2020. Okay, so on 1st January 2020, we are going to have the balance brought down of 5,638. Okay, but remember that on 1st January 2020, we made a rental payment. Okay, so 1st January 2020, that is cash payment of 3,000 Ghana cedis. Okay, and there was a finance charge at the close of the period. Okay, that is 31st December 2020. There was a finance charge as well. The finance charge is an amount of 362. I explained the reason why we are debiting the cash payment, then we credit the finance charge. It has been explained already. Okay, we are debiting the cash payment or the rental payment because when payments are made, the lessee is going to credit the cash book and debit obligation and the right of use asset. The finance charge is going to be debited to the statement of profit or loss and credited to obligation and the right of use asset. Is that clear? So to close this account, we are going to have 6,000 and 6,000 as the debit total balance. Then there will be on 31st December 2020, there will be balance carried down of an amount of 3,000 Ghana cedis. And the closing balance for 2020 becomes the opening balance for 2021. So we are going to have 1st January 2021. There will be balance brought down of 3,000 Ghana cedis. Okay, but remember that for 2021 there was also a cash payment for 2021 at the beginning of the year. Okay, that is the rental payment of 3,000 Ghana cedis. Okay, but remember that at this place for 2021 there is no finance charge for 2021, so there will be no finance charge for 2021 as well. So the account has been closed automatically. There is no finance charge, there is no closing liability as well. So this is how we prepare the obligation and the right of use asset account. Okay, so we are moving to the requirement III. The requirement III says that you should show the statement of profit or loss and statement of financial position. Is that okay? So with the statement of profit or loss, it is only two items that is going to appear. That is the finance charge for the years and that of the depreciation charge. Okay, so we are going to do that in according to the years. We have 2018, 2019, 2020, and 2021. Is that clear? So we have the finance charge, the finance charge. Okay, so we are picking the finance charge from we are using the actuarial method. Okay, so you can see that from 2018, that is 959, 2019 679, and 2020 362. Okay, so we come and write them over here. That is 959 for 2018, 679 for 2019, and 362 for 2020. And there is no finance charge for 2021 when we are using the actuarial method. Okay, now let's consider the depreciation charge. So depreciation charge. Okay, with the depreciation charge is going to be done on a straight line basis. Okay, so with the depreciation, to determine the depreciation, this is what we are going to do. Okay, so depreciation is equal to the costs, okay, over the lease term. Okay, over the lease term. So the cost of the instrument is 10,000 Ghana cedis. Okay, and the lease term is for 4 years. It means that annually there will be a depreciation of an amount of 2,500 Ghana cedis as an annual depreciation. Is that clear? So when we come to the statement of profit or loss, we will represent each year with a depreciation amount of 2,500, 2,500, 2,500, and 2,500 as annual depreciation for each year. So we are done with the statement of profit or loss. Okay, we represent the finance charges and the depreciation charges as well. So let's now move to the statement of financial position as well. Is that clear? Okay, so with the statement of financial position, we are classifying the leasehold musical instrument under property, plant, and equipment. Okay, under property, plant, and equipment. So property, plant, and equipment. Okay, that is leasehold musical instruments. Okay, leasehold musical instrument. But remember that the cost of this asset, it was 10,000. Okay, that is the cost price. Okay, 10,000, 10,000, 10,000. Okay, is that clear? Then we are going to consider the accumulated depreciation. Okay, so accumulated depreciation. Okay, for the first year it was 2,500. So in 2019 it will become 5,000. Okay, we are accumulating the depreciation. We add 2019 it was 2,500. We add it to the previous depreciation, that's 5,000. We add to this year's 2,500, that is 7,500. We add it to 2021 depreciation of 2,500, making 10,000. Okay, so we can realize that the net book value here, it will be 7,500, 5,000, because we are taking the accumulated depreciation from the cost. The accumulated depreciation from the cost, is that clear? So we take the accumulated depreciation from the cost, we get 2,500, and there is no amount over here. Okay, so this is the net book value. Okay, the net book value, okay, of the leasehold musical instrument. Okay, so let's consider the liability column. Okay, so with the liabilities, okay, with the liabilities we have obligations and right of use assets. Okay, obligation and the right of use assets. Under the liabilities, the liability can be presented as one. Okay, but it is always advisable to split the liability into current liability and non-current liability. So let's do that. Okay, so we are going to have the current liabilities and non-current liabilities. Okay, that is what we are going to do. So you can imagine that, or you can testify or understand that the total of the liability will be the combination of the current and non-current. So let's first of all determine the total liability before we split it out. Okay, so it means that we are going to do it year by year. Okay, so to know the total liability, what we are going to do is that we are going to consider the liabilities at the close of the period. Okay, that is, we are doing this statement of financial position using the actuarial method. Okay, so you can see from our calculation here, at 2018 there is a liability at close of 7,959. For 2019, 5,638. For 2020, the total liability is 33,000. So for 2021, there is no liability. Okay, so we are going to present these liabilities as the total liability because payments are made in advance. Okay, so for 2018, we have this, 2019 this, and 2020 this. There is no liability for 2021. Is that clear? So let's present it over here. Okay, so we have 7,959 as the total liability. Then we have 5,638 for 2019. Then for 2020 we have 3,000. There is no liability for total liability for 2021. Okay, now we are going to split this liability into two. Okay, into current liability and non-current liability. Take note, this is very tedious or complicated, so just look at it and see how I do it. Is that clear? So to split this liability, what we are going to do is that the current liability over here is the rental payment being made, okay, for each year. So the remaining liability will becomes the non-current liability. So for 2018 there was a rental payment of 3,000. Okay, and for 2019 the same 3,000. Is that clear? And 2020 3,000. And because there is no total liability over here, there shouldn't be any amount over here, because if there is any amount over here, it means this amount shouldn't be zero. Okay, so we are able to determine the current liability by knowing how much we've paid within the financial year, because current liability, they are the obligations that lessees pays within the financial year. Okay, so if the lessees are able to pay 3,000 rental payment each year, and the remaining liability becomes the non-current liability or the long-term liability. So when we take this from this, we are going to arrive at 4,959 as the non-current liability. Then we take the current liability from the total liability. It is going to give us 2,638. Is that clear? Then there will be nothing over here. So this is how we split the total liability into current liability and the non-current liability. Okay, so basically this is how we make an accounting arrangement when payments are made in advance by the lessee. Is that okay? In a subsequent video, we are going to take a question where payments are made in arrears. Okay, that is where payments are made at the close of the financial year. Then we look at the accounting arrangement by the lessee. So your work here is to just subscribe to this channel, turn on the notification bell, share this video for others to also enjoy. Okay, so in our next video, we'll meet for nice academics. Until we meet, I think bye for now.